You are listening to the South America Brief. I'm Camila Perez, your virtual information influencer, guiding you through market data trends and stories from the vibrant economies of Latin and South America. Hello and welcome to a new episode of our podcast. I'm Camila Perez, Market Intelligence Specialist for Latin America, speaking to you from Mexico City. Today we dive deep into the current economic and geopolitical dynamics shaping Latin America and the Caribbean, an increasingly complex yet vital region in the global landscape. On the other hand, Argentina has emerged as the region's fastest-growing economy. GDP grew 5.8% year-over-year in Q1 2025, and monthly inflation fell to just 1.5% in May, the lowest rate since 2020. However, this comes amid rising unemployment, now at 7.9%, and tight fiscal policies. The government under President Javier Milei has implemented strict spending cuts and achieved 6 consecutive months of budget surplus for the first time since 2008. Panama also stands out, with an upgraded growth forecast of 4% and the lowest inflation in the region. In contrast, countries such as Bolivia, Brazil, and Venezuela have faced significant upward revisions in their inflation outlooks. Despite the macroeconomic headwinds, Latin America is increasingly viewed as a destination for portfolio diversification. Brazil and Mexico dominate the investment landscape, accounting for over 60% of the MSCI Latin America index. With equities near record highs and interest rates still attractive, both countries are benefiting from global investors pursuing yield strategies, particularly through the carry trade. The Brazilian real, supported by a policy rate of 14.75%, has gained 9% against the dollar this year. Regional bond markets are outperforming Europe and Asia by a wide margin. On the fiscal front, the region is still recovering from the pandemic's economic fallout. After stimulus-driven deficits peaked at 6.3% of GDP in 2020, efforts toward fiscal adjustment have been uneven. Argentina and Ecuador have taken bold steps, including subsidy cuts and tax reforms. In contrast, Brazil's goal of a zero primary deficit in 2024 is likely to be missed, while Mexico's public finances were strained by election-related spending in early 2024. The new administration under President Claudia Sheinbaum aims to reduce the fiscal deficit to 3.5% of GDP by 2025. Public debt remains a critical concern. After dipping to 68% of GDP in 2022, gross government debt rose again to 73.7% in 2023. Argentina stands out with a staggering debt-to-GDP ratio of over 150%. The Inter-American Development Bank recommends maintaining debt levels between 44 and 55% of GDP, a threshold already exceeded by several countries. One of the region's long-term challenges is pension reform. With aging populations and low contribution rates, less than half the workforce contributes, countries like Colombia, Peru, and Uruguay are rethinking their pension systems. Uruguay implemented an increase in the retirement age to 65 in 2023, but the reform is facing resistance. In Colombia, the proposed changes could create additional fiscal strain over time. Geopolitically, the United States continues to exert pressure on the region. Sanctions were recently imposed on Mexican financial institutions over alleged links to the fentanyl trade, barring them from doing business with U.S. entities. Washington is also closely monitoring China's growing influence in the region, particularly in infrastructure. In Peru, the construction of Chinese-financed ports, like Chance, has raised alarms in U.S. strategic circles. Brazil, meanwhile, is strengthening ties with China. Plans to issue panda bonds signal a deepening financial partnership, underscored by a high-level meeting between Presidents Lula da Silva and Xi Jinping in May 2025. Escalating tensions in the Middle East are also influencing Latin American economies. Chile's central bank has held its policy rate steady at 5%, citing global instability, including the Iran-Israel conflict. Bolivia has publicly condemned U.S. military strikes against Iranian facilities. The Trump administration's continued hardline immigration stance has also sparked unrest. In Panama, deportation policies led to protests and the closure of Chiquita operations, putting pressure on President Molino. Domestically, political landscapes remain turbulent. In Mexico, the appointment of a former cartel lawyer as a criminal judge has triggered criticism following controversial judicial elections. Brazil's former president Jair Bolsonaro faces trial over alleged coup attempts, while JBS, the world's largest meat producer, has returned to the New York Stock Exchange in a dramatic turnaround. Petrobras continues to be at the center of debates about the future of Brazil's energy sector. Argentina, too, is undergoing major changes. Former President Cristina Kirchner has been banned from politics following a corruption conviction. The province of Tierra del Fuego, key to Argentina's Antarctic and Falklands claims, is under reform scrutiny by President Milei. In Colombia, political violence continues. A senator was shot in Bogotá in a targeted attack, while clashes between civilians and dissident FARC forces have led to the detention of dozens of soldiers. Venezuela remains economically fragile. The recent arrest of multiple figures tied to the black market, among them a former finance minister, has intensified fears of renewed instability. Despite this, investors anticipate a debt restructuring agreement with Caracas. In summary, Latin America is a region of contrast. Deep challenges coexist with compelling opportunities. Countries like Argentina and Panama show that even under pressure, stabilization and reform are possible. The interplay between U.S. and Chinese interests continues to shape the region's strategic path. Looking ahead, the key to sustained progress will be governments' ability to deliver structural reforms, ensure political stability, and foster a transparent and resilient investment climate. It is a pivotal moment for international decision-makers and investors seeking long-term potential in an increasingly fragmented world economy. Thanks for tuning in to the South America Brief. For more details, links, and further insights, check out the show notes. By the way, I am 100% AI generated. My voice was created with 11 Labs, and I'm here to bring you curated knowledge with a human touch. This podcast is powered by InfoBroker World, your partner for market intelligence and custom research on Latin America. Until next time, stay informed, stay curious. Hasta luego.